The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. We do not know APRs. We don't know what the rates were paid, points, or received points. We just know the actual locked interest rates. That's, again, OBMI, 35% market share. So it's a good cross-section of what's going on in the world. 30-year conforming loans yesterday locked at 6.435. Jumbo loans, 6.549. FHA loans, 6.399. USDA loan, 6.458. And the best loan on the market has now got the best price. It generally does. It's the VA loan. And whoa, it took a big drop yesterday, 5.967. And as I look at the markets this morning, I'm going to be able to tell you with fairly good certainty as of right now, and it doesn't matter until after the Federal Reserve starts blowing up the market again. 10-year treasuries are down 4 basis points, 3.381. The S&P 500 is up 6.25. Mortgage-backed securities are up 39 basis points, which means interest rates are down. Again, as of right now, all bets are off after Jerome Powell starts speaking at about 11:30 our time. We already know that they're going to increase interest rates 25 basis points. Yeah, we know. I've said it before.
Such an idiot.
Yeah,
Such an idiot.
Think about this. You've got an attorney that's running the economy. Now, I think there's somewhere around 330 million people in this country. Let's exclude Joe and Hunter Biden. So, can't we find anybody that knows more about looking forward than Jerome Powell, who's an attorney who studied law? Now, I'm not putting lawyers down. Well, maybe I should. But, when you study law, you're studying what happened in the past. We want to try and figure out what's going to happen, Mr. Powell. And by increasing interest rates, we know what's going to happen. We're going to have more bank failures because think about this. I mean, if a bank is being prudent, and we hope they are, they're supposed to be conservative. If a bank is being prudent, on their books, they've got bonds that they put out there, and maybe it's a mortgage-backed security that has a 2 or 3% coupon. If their customers have any brains at all, you take your money out of the bank that's giving you a 0.5% interest and maybe put it into something that's very, very risky, like a 10-year treasury that right now is paying 3.397. Is that that's not a risky investment. So maybe that is a good place to put your money. Or maybe you're going to put your money into something that maybe is a little bit shorter term. Right? There's all kinds of places to put your money right now. You don't have to be a rocket scientist. You don't even have to be smart. I'll get Joe Biden, think about this one, because you could even do this. Put your money into a shorter term treasury, like a 1-year treasury. So those bonds that are on the bank's books, those are getting 2% yield or 3%, whatever. 1-year treasury is getting 4.76 right now. But if you sell that bond, the bank takes a loss. So the depositors are taking their money out of the bank and putting it into a 1-year treasury. That's going to probably get them 10 times the money. Remember the bank? What were the banks paying us when we put money into savings or CDs a year and a half ago? Nothing. And you get 4.76 on a 1-year treasury right now. So when Powell increases interest rates later today, it's going to cause more trouble in the banking industry. And even though we don't have the implodometer back yet, some of us that were around in 2009, we were watching 511 banks fail. Well, the 3 that failed already this year had 50% more in assets than all those 511 combined. They have $550 billion in assets failed. Second, third, and fourth largest bank failures ever. You think the other banks are going to be smarter? Maybe Hunter Biden's on the board. I don't know. ADP report came out today. They released their report. 296,000 jobs created in the month of April, twice as strong as the 150 expected. So we're going to have the Federal Reserve is going to say, look at the jobs market. Well, I will. How about looking at the earnings reports of the S&P 500 that in the current reports? And they actually say that in those reports, the CEOs on their conference calls are talking more about job layoffs than hirings. That's called looking forward. ADP also reported that annual pay for job stayers increased 6.7% year over year, down from 6.9%. Job changers saw an average increase of 13.2%. Quit. Go find a new job. See if how that works out for you. I just look at some of these numbers and I think about what the Federal Reserve is going to do today. And all I can think about is, it's the same thing over and over again. But that's a Mortgage Minute brought to you by our friends at Geneva Financial when you're ready for that next home loan. Geneva's got the programs and the products. You just need to make a call, 800-306-1990, 800-306-1990.